Welcome back. I'm Pratap here. Today is the 19th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And you might be knowing it is a highly expensive training course. The cost of the training is over 8,000 US dollars. Even then, we are providing complete free training, and all the training lessons are already available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. If you click on the tab, you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to the training instructions mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At our Telegram channel, top of the window, you can find pinned messages. If you click the pinned messages, one of the pinned messages are having all the training instructions. Please learn this course according to my training instructions. Then you will become a very good independent trader in the coming months. Please make use of this opportunity. Now let's get into the performance evaluation of our high liquidity zones generated in our yesterday's end of the day report. So yesterday we have identified 11 high liquidity zones from daily and 75 minutes time frames. The first one is MFSL. So here we have a failed ERC candle as a leg-in, 3 base candles and a drop candle. This is how our software identified. You get some hidden body for this candle. That way this is a drop candle. Okay, this 75 minutes, this is a daily zone, not 75 minutes. This is a daily high liquidity supply zone. And this daily high liquidity supply zone is fine-tuned with 75 minutes. We have multiple order flows in this zone. So observe carefully. So here you have a rally candle, failed ERC. Dynamic view, it is a rally. And 2 base candles and a drop candle. This is 175 minute zone. And also you have one more 75 minute zone here, rally, base, drop here. So these are the 2 order flows we have identified. And both these order flows are again fine-tuned with 15 minutes time frame. In the 15 minutes time frame, again multiple order flows are there in each zone. Here, if you notice here you have a drop, 3 base candles and a drop candle. This is at the proximal line. And also there is one more zone here, rally, 1, 2, 3, 4 base candles and a drop candle. Of course, here also it looks like drop, base, drop, but anyway, it is a, this layout is not really great. And even if you consider, it is like a LOTL within this, very close. That means everything will overlap, all 3 will overlap. Okay. And what about here? Here also we have 2 zones. See here you have a drop, base, drop, follow through candles. And also here also at the distal line, you have a rally, base, drop, lower time frame zone as an horizon to the higher time frame zone. The 15 minutes horizon to this entire 75 minute zone. Definitely we have a very strong order flow in this area. Okay, these are the 15 minutes fine tuning. And these, we have 4 15 minute zones. Again, we have to fine tune with 5 minutes time frame. Go to the 5 minutes time frame. In the 5 minutes time frame, here you have a rally candle. You have 1, 2, 3, 4 base candles and a drop candle. This is a fine tuned 5 minute zone, but it is already tested. Because it is tested, you can't use it for your trade plans. And again here you see rally, you have 1, 2, 3, 4 base candles and a drop candle. It is looking like a tested zone only again here also, right? But you see here it is a LOTL, rally base drop again. LOTL. That means a new order flows will be added here. Definitely you can consider another trade plan from this zone, because this could be a high liquidity zone. There are higher chances this zone might be having. Okay. Apart from that, in the next we have here, we have a drop. We have 1, 2, 3, 4 base candles and a drop candle. This is the way you can draw a zone. Or if you can also consider drop, base, medium size candles and again a drop. That way also you can drop. Either way you can draw. We have drop 1, 2, 3, 4 base candles, drop candle. Or you can consider drop, base, drop. If you are convinced this is a large candle, then only you can draw. This is a leg-in, base, drop. But all these are all medium size. And what else here? You see here, we have a rally, base, drop. This is the lower time frame, 5 minutes horizon to this entire 75 minutes fine-tuned zone. Here 15 minutes horizon is there. For this 15 minutes, this 5 minutes is the horizon. And this 5 minutes not only horizon to this 15 minutes, even this 75 minutes also horizon. And moreover, this 5 minute zone is acting as a high liquidity zone. See, multiple times this zone is tested. Maybe it could be high liquidity. See how it pushed. Again how it pushed. This time a big push. Entire leg out candle formation also taken place from this push. So this is the area. Very strong. We should not miss. So we have how many? 1, 2, 3 order flows are there. This could be a high liquidity. Could be. We are not say confirming. Maybe chances are high. And this is already a tested zone. If you want to plan a trade, again, by seeing the rejection, if you feel and the risk is small, you can plan, nothing wrong. But it is a tested zone. If LOTL is created, maybe we would have considered this could be high liquidity. But today what happened? See, the first one is violated. After that, got a trade from the second one. And prices reached 15. But very tricky trades. Why? Because all these are all fine-tuned entries. I already explained fine-tuned entries in the earlier HLQ analysis videos. Those important videos I kept in important strategies and analysis playlist at our channel. Go to the channel homepage, go to the playlist. You have a playlist called important strategies and analysis. I request everyone should complete all those important strategies and analysis videos. Then only you get a lot of experience. One of the videos I explained how to fine-tune the entry. Not only that, in the recent time, in lesson 29, probably in 29.2 video, I explained how to fine-tune the entry. Maybe I didn't remember. One of the lesson 29 series, one of the videos also, I explained fine-tuning the entries. So please complete those lessons. When we have to fine-tune the entry, I explained all the scenarios in those videos. But quickly let me revise those topics. Let me go to your target is 15-minute zone, right? Here you have a 15-minute zone. You have a rally, base, rally and follow through candles. Here we got the trade. And if you are planning your trade at this type 2 proximal entry, you will not be getting 1:3 RR. Because 1:3 RR is not there. What you do? You will simply leave this trade. But there are chances if you fine tune, you get an entry. What is that fine tuning? Instead of making your entry here, go a little inside until you get 1:3 RR. For that we have to use the trading view tool. Which tool? This long position and short position tools. Because this is a short trade, short position tool we are using. How to use these tools? Already you learned these tools long position in our course. I didn't remember the lesson name, but one of the lessons you learned this. See, actually you have to plan your trade like this. You have to plan your trade like this. How much RR you are getting? 1 is to 2.14. Instead of that, what I did, I moved the entry. See, I am moving up. The RR is changing. Now RR is a 2.5. Further move up. You get 1 is to 2.6 RR, 2.7 RR. Further move up. You get 1 is to 2.97. Further move up. You are getting around 1 is to 3 RR you are getting. If you move up, more RR you are getting. But sometimes if you miss too much, if you move too much, you will be missing the trades. That's why don't move beyond 1 is to 3.1 or 3.2. So I generally keep 1 is to 3 below 1 is to 3.1 only I will keep. Otherwise you will be missing the trades. Of course, today even if you move up to 1 is to 4 also, your trade would have been executed today. But it won't happen every time. Because price action is completed, now you can easily tell, okay, I would have moved up to 4.1. But before taking the trade, how your mind is working, that is important. Not after completing the trade. After seeing the chart, we can play anyway. But before taking the trade, that's why make sure you will not go beyond 1 is to 3.1. If it is 1 is to 3, it's excellent. But maximum up to that you can expect. Because sometimes we have greediness. What is the greedy? If we go more deep, if prices reach and from there if they fall, we get more profit. This is how we feel. That is the greediness. Because of our greediness, many times we will be missing the trades. If you move too much, prices may reach, you get an entry, after that your trade will be stopped out. That possibility is also there. So that's why perfectly you should plan. This fine-tuning the entry is a very important concept. Please everybody complete those video lessons. Okay, once you got the entry, once you got the, see prices went beyond that. Even more. Even if you find, especially this particular trade, even 1 is to 4 level, if you fine-tune also, your trade would have been executed. But anyway, let us don't break the rules. Our fine-tuning should be up to we achieve 1 is to 3 RR. And while fine-tuning, if prices are going beyond and nearing to the distal line, we don't fine-tune. We will leave the trade. We don't plan our trade. Because if it is close to the distal line, higher chances your trade will be stopped out. And from this entry, till this 15 minutes target, prices reached and we got 1 is to 3 RR we got. After that, the zone is violated. If anybody intraday, you know what happens, sometimes second trade also may be executed. If anybody would have planned our second trade, it would have been stopped out. Okay, but already you got a good successful. If anything stopped out, you won't really bother about that. It is a negligible only. And after that, it reached again to the next one. See, your first trade is completed. This is the one we didn't plan because it is already a tested zone. That's why just I want to show you. I have drawn this, but actually your actual trade plan, you will delete all these tested zones. The one which is not tested, this is the one. And this is even more fresh zone. And today again, after this is violated, we got a trade from this zone. Next one. This is also you should fine tune. Because here also the same problem. Here we have a new 15 minutes zone. See here, you have a rally, base, rally. Candle is completed. After that, prices reached here. And this rally, base, rally is your target. So what you have to do, you have to take a trade, fine tune the trade until you get 1 is to 3 RR. So I fine tuned up to this until the fine tuned area prices reached. You got the entry and after that prices reached the 15 minutes target. Here rally, base, rally, 15 minutes target. So that way you got second trade also successful. And when you got the first trade, let's go to the 5 minutes time frame. First trade you got at 10:45 and reached the target at 11:05. So in 20 minutes your first trade is completed. When you got the second trade you got at 1 o'clock. And when it reached the target, 140. In 40 minutes, second trade is completed. So this is the way Max Financials has given two successful trades. First trade has given you 8,640 rupees profit, which is 5.1% ROI as per one futures margin cost. Second trade gave you 6,800 rupees profit, which is 4% ROI as per one futures margin cost. But both these trades are based on fine tuning the entries, so that you get 1:3 RR till your 15 minutes target zone. And when you fine tuned, luckily both the fine tuned areas you got the trades. Prices reach till that and you got the trades. And the next one is MRF. MRF is a 75 minutes high liquidity supply zone. How our software identified? As a drop, two base candles and drop. And we have a two fine-tuned zones here. Go to the 15 minutes time frame. Drop, three base candles and drop. Sorry, maybe you can consider rally also. I consider rally, medium size. Rally candle, two base candles and a drop candle. Rally base drop, 15 minutes zone. And also here, lower time frame zone horizon. 15 minutes horizon, see rally, three base candles and a drop candle. This 15 minute zone is the horizon, lesson 22 concept. For this entire 75 minute zone. Obviously in this area you have a strong order flow if this 15 minute zone is having a fine tuned 5 minute zone. Otherwise, the 15 minute zone will be violated easily. See, ultimately, the fine-tuned 5 minute zones are very important to identify the institutional order flows. Okay, these are the two 15 minute zone. One is inside the zone and another one is at the distal line. This is lesson 22 concept, lower time frame zone horizon to the higher time frame zone. And lesson 22 is a very powerful concept. You are already aware of it. Okay, now let's go to the 5 minutes time frame. So in the 5 minutes time frame, you have a rally base drop. Actually, you can keep this medium size candle also part of the base. This is the actual leg out candle and follow through candle with a big gap. But the origin is started, imbalance is started. This is the origin for the imbalance. So that's why I have drawn zone within this area. Rally base. Actually, this is not the leg out. This is the leg out. This could be part of the base. But why I limited two advantages I get. The real institutional order flow is here. The actual imbalance started and continued. Maybe the time is completed. That's why it is looking like medium, but follow through. So that's why I minimized the risk. I already explained these techniques several times in our earlier HLQ analysis video, but why and again I am repeating. Any new members, they are listening from this video, probably they will learn again. Or even some of you already learned but you forgot. Once again, it is like a revision to you. Because important concepts we should never forget. And here again you see rally base drop. This is the fine-tuned zone. Inside the 15 minutes horizon to this 75 minute zone. 75 minutes high liquidity. Actually, it looks like a bull trap. Because 75 minutes is violated, what people will do? They will exit the trade. And here institutions will be capturing. So we have a bull trap inside the 15 minutes horizon. This is how you should visualize these concepts. But this one is already tested zone. See, this is already tested. When? Friday, 7th March. After that, see how much good profit it gave. How perfectly our high liquidity fine-tuned zones are working. Gave a huge profit on that day. Friday 7th, sharply. So because it is tested, we can't plan any trade today. But today what happened? See, once again it is tested, sharply came down. Probably it might have given you 1:5 or 1:6 RR also it might have given you. But anyway, we didn't plan because it is a tested zone. But by seeing the price action, we feel like, okay, we would have taken a trade. Unless it is a high liquidity zone, you can't plan a trade. Second time. Only high liquidity zones, only second time you should plan. If anybody took a trade, it is like a lucky trade. They are the lucky people today. But you can't depend on the luck every time, right? So that's why we should follow the principles. So this is the one we didn't plan any trade because it is a tested one. The one we planned is here. See, prices reached this area. And finally here we have a target, 15 minutes target. Go to the 15 minutes, you will get clarity. See, here you have a rally, base, rally. This is our target. And we got 1:4 RR till the target. Till the 15 minutes target, we got 1:4 RR. Okay, it reached the 15 minutes target. And when we got the trade, this trade, probably you got the trade at 10 o'clock 5 minutes candle and reached the target at 11 o'clock 25 minutes candle. More than an hour, you might be in trade. So how much profit it has given? MRF. MRF has given 2,564 rupees profit, which is 2.7% ROA. Today all the profits are less than 6%. Our average intraday ROA is 6%. But today, the momentum, because all these are all short. Remember, today market is bullish, super bullish today. But all our trades are short trades only today. After that, the zone is violated. See, if anybody would have planned second trade, it holded for some time, but demand is also very strong. Supply is also strong. A lot of time it holded our prices. And finally, all the supply is consumed and demand finally violated this. Everything is gone. If anybody took second trade, maybe our second trade would have been stopped out. Okay, but we already got a good successful trade here. So this is about MRF. See, the power of high liquidity zones, this is how you should understand. On a bullish day, today how many points? 73. At some point of time, market is even more up, more points, right? I think maybe I should change my statement. It is not super bullish day. I was actually looking into Bank Nifty. It gave 388 points, but still percentage 0.7 only. But anyway. And the next one is Titagarh. It gave 3 trades, Titagarh. So very interesting analysis and very interesting way you have to observe this stock. Look into this. This is a 75 minutes high liquidity zone. Our software identified drop based drop, but it is not having a proper 15 minute zone. Look into the 15 minutes time frame. Here we don't have a proper 15 minute zone here. Or even if you want to consider drop all these base candles and then drop, that means our 15 minute zone and 75 minute zones are same. But first of all, the structure is not good. But we have a 5 minutes horizon that plays the important role today. That played the important role today. See here, I have a dilemma here. Drop, 2 base candles, drop. Can I draw? This is a failed ERC. It's a question mark. Or rally, 1, 2, 3, 4, 5 base candles and drop candle. Can I draw like this? If I draw, see the risk involved, too much risk. So I have in a dilemma, what to do, what kind of decision making I should. That's why what I did, I went to 3 minutes time frame. I told you sometimes when you have confusion in the 5 minutes decision making, go to 3 minutes. If 3 minute structures are completely in your favor, you can take the 3 minutes zones. The main advantage is risk will be minimized. But remember, first your 5 minutes should support, then only you should go to 3 minutes. 5 minutes already supported. The question is, I have to draw zone up to here or not. See, here you have a drop candle, you have 3 base candles, and you have a drop candle. Of course, this is the medium size candle, part of the base only. Now risk is minimized. You see here, you have a drop, 3 base candles, drop. So this is the way we got the justification. Now go to the 5 minutes time frame, you get the clarity now. Actually, what I have drawn is 15 minute zone. 3 minute zone. The 3 minute zone is like almost same as like drop, 2 base candles, drop. But here the order flow is there. See, from here it picked up the orders and this entire down move is started. So that's why you can plan a trade. And today it gave you multiple trades. Go to 1 minute, you get better clarity. See, you got the trade at 923 candle. After that, it achieved 1:3 RR. Those who are targeting 15 minutes, here somewhere here you have 15 minutes target, failed to reach 15 minutes target. Let me show you. Here you have 15 minutes rally, 2 base candles rally. This target is not achieved. But still, why we are considering it is a successful trade? Because 1:3 RR is achieved. So in 1 minute candle, now you look into the chart. So this is 1:3 RR. You got the trade. When you got the trade in 923 and when achieved 1:3 RR, 925. So those who exited at 1:3 RR, you would have definitely got a good profit in just 2 minutes. That's the reason why I told you look into the 1 minute chart. 923 candle you got the trade and 925 minutes candle it got the target. So that means within 2 or maybe say 3 minutes, including the trade you got. 3 minutes, in just 3 minutes your trade is completed. Next again, once again price is entered. If you would have taken a second trade. So once again you got 1:3 achieved. When you got the trade, second trade at 9 o'clock 31 minutes. And when it achieved in this candle, it achieved 1:3 RR. 939 candle. 931, 939. That means within 10 minutes, your trade would have been completed in less than 10 minutes. Second trade. And after that, you got the third trade in case if you would have taken a third trade. But here there is a 1 minute high liquidity zone, rally, base, rally. It is keep on holding the prices. Again drop, 2 base candles, rally. Again drop, base candles, rally. But what you would be expecting, this zone will be violated. Already several times it is tested. Now at least you should confirm. Maybe if you did not book your profit here, let us assume, if you missed, if you did not realize, because after testing, first time it reached. If you did not realize this is a high liquidity zone, maybe after prices further moved, you have to realize. You have to, whatever the profit you are getting, next time when it reaches here, you should book the profit. See, once again it went, again it pushed. Suppose if you would have booked the profit, again you would have got a trade, maybe you would have went deep inside. Why deep inside? To achieve 1:3 RR. Somewhere here, if you take a trade, definitely you get 1:3 RR up to this 1 minute zone. That way you might have got 4 trades. If you would have realized, probably this is the area you have to book. then you might have taken a trade, a little dip. Or maybe if you would have realized, maybe it is testing multiple times and LOTL zones are getting created. Maybe here you would have taken a deep entry somewhere here until you get 1:, because fine tuning the entry to get 1:3 RR up to this 1 minute zone. That way you would have got 2 trades. But anyway, I'm not looking in that direction. Generally what we think, these 1 minute zones will be violated. After at least 2 or 3 tests, you will be realizing. Let us assume this is first test, second test. Now you realized this is maybe this could be a high liquidity zone and you are already in the trade, but you didn't book the profit because already prices moved and you are ready to book the profit next time when prices are reaching. But what happened? Again prices entered. Because you are already in the trade, you didn't take one more trade here. You can't take because your money is already struck in this trade. Now prices reached, now definitely you have to book the profit. In case if you don't book, the next time prices did not reach. This time zone is violated. Definitely your trade would have been stopped out. But in reality, booking the profit here is the ideal scenario. If you might be listening our HLQ analysis videos for the past few months, by this time you might have gained this knowledge. We should book profit in this 1 minute high liquidity zone. So that way it gave you 3 trades. This is the first trade, achieved 1:3 RR. This is the second trade, achieved 1:3 RR. Third trade did not achieve 1:3, but 1 minute zone, forcefully you have to book the profit, even though the RR is less than 1:3, because it is not letting your prices go down, because it is a high liquidity zone. Okay, how much profit we got from the 3 trades? In Titagarh, you got first trade 2.4% ROI, second trade 2.4% ROI with a profit 3,500, third trade only 1.5 ROI you would have got because you booked a little earlier and your profit could have been 2,250 rupees. And next one is Ramco Cement. This is the one stopped out today. And this is a 75 minutes high liquidity supply zone. This is a drop candle because hidden body will be added in this candle. So software considered this is the leg-in with a drop and 4 base candles and a drop candle. This is how software identified this zone. Inside the 75 minutes, we have a 15-minute zone. So here failed ERC as a rally, base, drop, follow through candles. So within this area, again you have a 5-minute zone, fine-tuned 5-minute zone. You have a rally candle, you have 1, 2, 3 base candles and a drop candle. That way, I think I have considered this as a drop, base candles and drop. This is the 15 minutes level we considered, but this is the one I considered drop because this is a medium size drop candle, base candle and a drop with hidden body. You have to add the hidden body. It is a big drop candle. And this is the 5-minute zone. But why I have drawn this blue color line? That is important. This zone, this is the type 2 proximal we have drawn, right? This zone is having 2.1% negative ROI we will get if the trade is stopped out. That means our risk is beyond 2%. I think 2.2 or 2.3, something we have, including stop buffer. So that's why what I did, I adjusted the entry up to blue color line. So blue color line, whatever the value, price reach, then only you have to take the trade. That means at 857.95, including stop buffer value, if you consider, then only your trade will be in 2%, exactly 2% ROI you are getting till the blue color. If you don't accept 2%, you accept only 1.5. The blue color line, further you have to move until you get 1.5% risk. Suppose you take only 1.2 risk maximum, further you have to move this blue color line. But if you keep on moving like that, what will happen? Many times you will be missing the trades. So that's why a trade-off should be there. Your risk, at least some minimum risk you should accept. At the same time, you should not miss the trades. But anyway, here performance I am checking as per the theory, not as per the practicals. Practical could be your risk not beyond 1.3%, your risk, your accepted risk. But theory, 2%, maximum accepted risk is 2%. You should not take beyond 2%. Less than 2% you can take, but not beyond. If a risk is beyond 2%, it will hurt your capital when the trade is stopped out. So that's why you can't take beyond 2%. Less than 2% you can take, but more and more percentage you reduce, there are higher chances you will be missing the trades. So that's why according to the theory, the 2% level I have drawn the blue color line. If price reach, there only you can take. Actually, you are supposed to take your entry at 857.75. 857.75. But I am taking at 857.95. Instead of 75, 95 paisa I am taking. Till that 95 paisa, if I take, the risk is coming 2%. Exactly 2%. Beyond that, more than 2% we are getting. That's why at blue color line only we take the trade. See, that's why you see the risk is exactly 2%. That is the maximum accepted risk. So with 2% risk, you will be getting a loss 2,635. Suppose your risk is 1%, half of the loss only you will get. It's all depending on how you are managing your trades. But more you reduce, higher chances trades will be missing. Okay, today it is a failed trade. Even if you keep your trade exactly at the digital line also, your trade will execute because it is stopped out trade. But let us assume it is a successful trade. Your trade may reach a little and immediately it will come out. That way you will be missing the trades. So please do these kind of calculations carefully. So that's why after the blue color line only, this is the trade plan. Those who accept for up to 2% level. Beyond 2%, you have to reject this trade. Either you have to fine tune the entry or you have to reject the trade. Generally, we don't reject high liquidity zone trades because high liquidity zone success rate is high. Because it is stopped out, okay, fine. We know it is stopped out. But before taking the trade, what is your hope? You will get success in this trade. That way you will be planning your trade. So this way Ramco Cement would have given you, those who planned up to 2% maximum risk, you would have got a maximum loss of 2,635 rupees. Those who took even less risk, your loss will be even much lesser than this value. But this is the maximum loss you would have got. Maximum loss you would have got. So these are the trades, and few trades are also stopped out, but we didn't take. Reasons are either they are at 9:15 candle or they are after 3 o'clock. Because we are not considering after 3 o'clock, not considering in 9:15 candle. There are few trades. ABFRL is one. This is a 75-minute zone. This 75-minute zone is fine-tuned with 15 minutes time frame. This is the one, drop base, drop. Again drop base, drop also came, LOTL almost close. You have two LOTL zones here. And you have a 5-minute zone. Here you have the 5-minute zone. Because this LOTL doesn't have proper 5-minute structure. You can clearly see here. That's why you can delete this. Just I want to show you. That's why I have drawn this. This is the actual one. And this 5-minute zone rally based drop is like an horizon to this zone. Earlier prices came close to this. So see the rejection. Definitely we don't want to miss this trade, but unfortunately morning 9:15 itself, this zone is violated. Morning 9:15, 1-minute candle. Look into 1 minute. This is the one. Morning 9:15, 1-minute candle. Opened with a gap and entered and finally closed inside. So that way we escaped from this stopped out trade. And the next one is daily zones. Supreme Industries, this is a daily high liquidity zone. We have a fine-tuned zone here. How our software identified drop base drop. We have a 75-minute zone here. Rally base drop with hidden body. Again a 15-minute zone inside that. We have a drop, 2 base candles, and again drop with hidden body. Inside we have a fine-tuned 5-minute zone. Rally, 2 base candle. This also you can add into the base, but imbalance started from this candle and continued from this. That's why risk management point of view, I have drawn zone like this. But anyway, today price did not enter into the zone. We didn't get any trade. And PI Industries, this is also a daily high liquidity supply zone. And we didn't get a trade today. This is a with hidden body. This is a drop candle. Base drop. Again, hidden body you will add. Some more body will be added because there is a gap. So drop candle. This one is fine-tuned with 75 minutes, a drop, 3 base candles and a drop candle. Again, some more body also we get in this candle with a drop candle with hidden body. And this one fine-tuned with 15 minutes time frame. Here rally candle, 1, 2, 3, 4 base candles and a drop with hidden body. And this one again fine-tuned with 5 minutes time frame. Here we have our actual institutional order flow. A drop candle, you have a base candle with hidden body, drop candle. But today prices did not enter into the zone. MFSL we discussed and L&T. L&T is also a daily high liquidity zone. This also we did not get a trade today. Prices entered in the zone but did not reach our fine-tuned area. How we have drawn this zone? Go to the, this is a daily zone. Software identified this as a drop, 2 base candles and drop. This one fine-tuned with 15-minute zone. We have a drop. You have 1, 2, 3, 4 base candles and a drop candle. Because I will not consider this is the lower time frame horizon because this candle is part of the zone itself. Okay, next 15 minutes. Inside that we have a 15-minute zone. Rally, 2 base candles and a drop candle. Rally base drop. And again fine-tuned with 5 minutes time frame. Here maybe rally base drop. Maybe if you consider this is a failed ERC, you will be drawing your zone like this only. Already tested once and tested second time. Maybe, I don't know, we should consider as a high liquidity. The reason is LOTL zones are not here. Based on the rejections, you can't really calculate because this time went deep, almost deep inside. Maybe next time also if it is tested and come down, maybe we can consider high liquidity. At least some confirmation because already went deep inside and came down. Even then it is tested third time means maybe we can believe on this zone. If it did not went inside, maybe just touched and again came down, we would have considered third time. Because already tested 2 times, third time, but second time went deep. So that's why I don't have any confidence that this could be a high liquidity zone. By manual way of I'm telling, if our software identifies this as high liquidity, definitely we can plan our trade. That is supply demand zone chain reports. We have to look into that. Next one, Kalyani Jewelers. So this is a daily high liquidity zone and this zone is violated at the last 2 minutes of the trading session. Sorry, last 10 minutes. So last 10 minutes violation we don't consider. Last half an hour we are not considering. for our intraday trading point of view. So this is a 75-minute zone. We have a drop, 2 base candles and drop. Again fine-tuned with 15-minute zone. Here you have a drop, 1, 2, 3, 4, 5, 6 base candles and a drop candle. Again fine-tuned with 5 minutes time frame. Drop, base, drop. See, why I gave importance earlier, see, type 2 is already tested. This is type 2. Sorry, not type 2, type 1. Type 1 is already tested, drop, base, drop. But type 2 also we are considering. We have enough risk. Type 2, if enough risk is there, HLQ analysis videos, we will plan one more trade. So that way we want to consider this trade for the second trade. But see what happened in the last 10 minutes in the market. 15-20 candle, everything is gone. Entire 75 minutes fine-tuned also gone. So anyway, see why we are not considering last 10 minutes or 15 minutes. Sometimes it will work, sometimes it doesn't work. What could be the reason? Because we never know. Institutions are playing with these zones for the short-term point of view or long-term, or a swing point of view, they are playing with us. We never know that. Suppose in these zones, institutions decided, okay, they want only for intraday trade point of view, they are keeping these order flows. What happened? Before closing the market, maybe last 1 hour or half an hour, they will be withdrawing all their order flows. At that time, easily it will go. Let us assume institutions are keeping these order flows, playing with us. Why I am using the word playing with us? Because always they play with us, institutions, with retail traders. They want liquidity. Of course, other institutions also will be participated in their play. They will be fighting among themselves. But sometimes the minimum liquidity they get from retail traders if there is no other institutional participation. Of course, our liquidity is very small. But small profit is also profit for them, right? So the other order flow, next time again they will get. They will push and again it will reach. One more test, again it will push. That way they will ensure their order flow will execute. But assume this is for intraday point of view. Their order flows they kept. They might have withdrawn maybe 1 hour or half an hour before or 45 minutes before. They might have withdrawn all their orders, cancelled all their orders. Now easily it will go. Suppose if they still keep the order flow here because they are using it for swing trading, probably after reaching here, sharply prices will go down. You have seen, right, some situations, price reach fine-tuned area and very sharply it will come down. That means institutions are using that zone for a swing trading point of view. That means they are holding their order flows. This is how you get some clues by seeing these kind of zone violations or price actions during the last 5-10 minutes in the market. But we can't participate in the trading for intraday point of view. Okay, anyway, it is gone. Last 5 minutes, we won't consider this stop out trade. Next one, granules, we already discussed in the previous videos. We said there is no order flow here. And Crompton also, same is the case. We discussed in the previous. Today, price came very close to this. But they did not reach the fine-tuned area. Some more movement is there, we would have got a good trade in Crompton. How to fine-tune this Crompton, I already discussed in the previous videos. Please look into the previous videos. So this is about the HLQ zone analysis. Hope some of these points what we discussed about fine-tuning the zones, they are very important for the new members who are listening these videos. For the members who are already listening HLQ analysis videos, it's a known point for them. Okay, hope this analysis might be helpful to the learners and existing traders, especially the high liquidity zone premium users. If you missed any trades, check how you missed, what kind of mistakes you made. Because you have to come out of your mistakes. You have to do proper analysis. See how deep we are doing this analysis. That understanding is important. Okay, let's all take a break here and we'll continue from here from our next video. Thank you.